Good afternoon, folks. This is Stephanie Yeager, Executive Director for the Indiana Association of County Commissioners. We are joined today with the Indiana Bond Bank and others for our presentation. I guess this all stemmed back from when Governor Holcomb issued Executive Order 2005, which allows for property tax waivers for up to 60 days past the May 11th tax deadline. This is likely to have some significant impact on some local units of government with their cash flow. So we wanted to bring this presentation to folks to allow you to learn more about some funding mechanisms that are available for you to those facing the cash flow shortages. So I am going to kick it off and send it to Brian Carmen with the Indiana Bond Bank to get our presentation started today. Again, thank you for joining us, and there'll be an opportunity for questions down the road. Brian?
Yeah, thank you so much, Stephanie, and thank you to all who are attending. I will pass it on to Ron Menges in just a second, but just cover a few housekeeping items. So the way we plan on holding this today is to just give a brief overview of the program, the advanced funding program, and the mid-year funding round. Once we've done that, I want to give the opportunity to answer any questions that you might have. So if you look to the right, somewhere on your screen, you should see either a chat box where you're more than welcome to put questions in there, but probably even better, there's a specific panel for questions as well. Just for the sake of simplicity, I will hold off on actually going through those questions until the end. But again, Ron Menges will go through the PowerPoint presentation, but we're also joined by our team who helps us with this program. And so any of the technical questions, any one of us should be able to answer for you. With that said, I want to just make sure, jump right in, be mindful of everyone's time today. This will be recorded as well. I know Stephanie has volunteered to post this to the IACC website, so we'll make sure to do that. And any of the materials that we cover in this, we can also send out as well to the registration and attendees list. So with that, I'd like to introduce the Director of Operations at the Indiana Bond Bank, Ron Menges.
Thank you very much, Brian. As Brian mentioned, my name is Ron Menges. I am Director of Operations with the Indiana Bond Bank. I've been with the Indiana Bond Bank for over 20 years. Have worked with the team of doing cash flow financing for that period of time, and the team has extensive experience in covering cash flow deficits, including the one that is caused by COVID-19. So I'm trying to advance the screen here. Brian, do you have, oops, it went too many. I apologize. First of all, the Indiana Bond Bank is a quasi-state agency created to help local government with the process of issuing debt. The Bond Bank was created in 1984 by the General Assembly, and we hopefully can provide you targeted financial solutions to you, including this issue with COVID-19. As Stephanie mentioned, Governor Holcomb issued the Executive Order 2005, which, among other things, required counties to waive penalties on property tax payments made after 11 days. So what does this mean for you? What this could mean is a mismatch of receiving property tax funds to the bills or invoices that you need to pay. In other words, you may be suffering a cash flow deficit. This could be in any of the property tax funds, including debt service funds. And this cash flow mismatch or cash flow deficit is expected to be in several local governmental units' funds throughout state government. The Advanced Funding Program was created back in 1989 to help or assist local government units with cash flow assistance. The mid-year is the second round, or the mid-year round, the one that occurs in the second half of the year. Applications for the mid-year program are now being accepted. The bond bank in its history has assisted local government with over $13.5 billion in cash flow assistance or tax anticipation warrants. And economies of scale and efficiency is realized through the process of pooling or combining entities together. You also are allowed to use the bond bank's team and finance professionals when going through the process of issuing your tax anticipation warrants. Briefly, here is the advanced funding process. There is a non-binding participation survey. Then you can send, the bond bank will send you an application packet with cash flows. The unit of government will complete the application and also the cash flow, and then financial assistance will be provided to the unit of government. Entities are not committed to this process until approximately 10 days before the closing when you sign a final sizing or final commitment with the bond bank. So let me emphasize, you are not committed if you complete the survey or the application, but you would be committed approximately 10 days before the participation or before the closing of and receiving of your funds. Here is a timeline for you, and we have made this very flexible for you to receive funds several different dates, including May 7th, May 28th, June 25th, and July 31st. And please note that IBB does recognize if you need funds after those dates, we would make funds available after July 31st if there is demand for those funds. So without going through step by step through this timeline, we will look just, for example, as May. If you do need funds in May, applications would be due April 17th with cash flows due April 24th. An ordinance would be provided as part of the participation in the program, and that would need to be adopted between May 4th or May 15th, and funds distributed on May 28th. Now, please keep in mind, these dates are on or before, and the bond bank will have flexibility in providing you additional time if needed to fill out the application and cash flows. However, we do need to have everything in line approximately 10 days before the funds are distributed. The participation survey is on our website, and that link can be found at iambondbank.com. It gives us an indication of when your entity needs funds so that we can set up our files for you. It would be greatly appreciated if you could complete the mid-year survey if you're interested in participating, and send that to midyear@iambondbank.com. Again, midyear@iambondbank.com. At this time, I'm going to turn it over to Angie Stino, and she can walk you through the application and the overview of the application, as well as with the cash flows.
Sure. So as Ron mentioned, as part of participating in the program, there is some information that we would need from your county as a borrowing applicant. One of them is the application itself. Much of the information has been streamlined in the past years. So if you're familiar with the bond bank program, we have worked really hard to really limit the amount of time that you would need to take to complete the application. We pull much of the data ourselves. Key points of information include really letting us know when do you need the money, what funds may you be running a shortfall. So if you're looking at all your property tax levying funds and looking at those, you'll be able to let us know. For example, you may need to borrow in a CUME fund. You may need to borrow in a general fund. And then there is some basic debt, operating, and economic information that if we can't pull ourselves, that we do ask you to provide. A large part of our review is really looking at cash flows. And that's key, and then it helps us. There we go. So I think a large part of our review really involves the cash flows. And what that requires, it requires you to give us a quick snapshot of where you have been on a monthly basis for the last couple of years, and then also allows us to project where you may run into a cash flow need. As Ron mentioned, the bond bank team and the CROW team are here to help. So if you have questions or if you're struggling on putting those cash flows together, of course, we just encourage you to reach out. Always advise you to have your annual financial report kind of handy, because that's really the good sense of where you would want that information. Ron, if you want to advance to the next slide. So again, I think at this point, we really like to open it for questions. I would just reiterate what the program is. It's really just a short-term tax warrant program. We recognize that normally you would receive your tax distributions a couple times in the year, but also have expenses on a monthly basis. Given the executive order with COVID, a lesser dollar value could be receipted by your county on your typical distribution date. So we realize that that cash flow deficit may be larger this year. So really ask for you just to take a look at your cash position. Look to see if you may find yourself running into a shortfall. So for example, say you're used to getting, $10 million in June, and now it's looking like that may only be $3 million. We realize that you may need additional funding support to get you through that time until that tax collection comes in. And that's what we're really here for, is to help fund that gap when you do run into a shortfall. Are there any questions, or maybe Brian, I can kind of send that back over to you to see if we've had any questions or where you want to go from there. Brian or Ron?
Yeah, I think now would be a good time for questions. I know I saw at least one come in. First question comes from Catherine, and she was asking what the interest rate may be, and certainly I know the answer to this, but Ron, I'll probably let you take that one.
Yeah, as far as the interest rate, what we'll do is pool your applications together, and we will go out and sell the notes, and we will know that interest rate approximately 10 days before closing. The bond bank will use market conditions to price your notes and try and get the best rate possible. But at this time, we do not know what the rate is, but we will have a pretty good idea as we get closer. But we will know that rate before closing those notes, approximately 10 days.
Thank you, Ron. We'll maybe give a few more minutes for any additional questions that we might have. I think while I allow for that, maybe kind of start into our wrap up as far as what you might do next. And really goes back to if you have any questions, feel free to reach out to us at any time. Ron gave you the Midyear email address, which again is midyear@inbondbank.com, and be happy to get back with you. But what's really important for us, especially as the impact that COVID-19 has had on this year's funding, is that we have an idea of what these different tranches are going to look like, and allows us to prepare ahead of time. So if you do think there's going to be any situation where you'll need cash flows, please fill out that notice of intent or participation survey, as we call it, and that'll give us an idea. That'll also give you first line of communication with any updates to the program as we kind of go through this fluid situation. And then again, kind of that next step is, just filling out those. To get another question, let's see. Because most of the tax money comes in right at May 10th, it might be hard to guess if we will need the money. Can each unit send tax money to borrow as well? Not sure, Angie or Ron, you want to take that one? Let me know if you need me to repeat that question too.
Yeah, go ahead, Brian. Say that one more time.
Catherine asked, because most of the money comes in right at May 10th, it might be hard to guess if we will need the money. Can each unit send tax money to borrow as well?
Angie, I'll take that. What we use to determine is how much you borrow is based upon your cash flows, and we can provide you that cash flow template. So if you want to fill in that cash flow template or need assistance from that cash flow template, let us know. But what we're looking for is a cash flow deficit in the next 6 months, starting in May. And if you have that deficit, then you would be allowed to borrow up to 80% of your property taxes. Having said that, we understand that the amount of distribution that you'll receive is very uncertain, and we will allow you to adjust that as needed. We've also provided some flexibility in repayment. So if you do receive your property taxes and borrow, then we'll provide flexibility in paying those back. And we can provide more information on that as we get closer to closing, and we'll certainly provide that with the closing documents. So having said that, all that, we would be flexible when you receive funds, but also be flexible when you pay them back if you do borrow.
And I think I did get some clarification on what you might be asking specifically. And that was, again, not only the counties, but the units that they would send money to borrow as well, i.e. townships and cities and things like that.
That is correct. Each unit of government would need to submit an application. So if you have a township, a school corporation, a library district, a city or town, they would need to submit applications individually. We would make those loans to those units of government directly. For counties, it would be just for county funds if they would like to borrow, but each unit needs to submit their own separate application.
Okay, well, that's all the questions we've gotten in as of now. I, again, want to be mindful of everybody's time. And let's see, one more question. Will the bond bank reach out to the other units? Yeah, it's a great question. I'll take that one. We are making every effort similar to today, and Stephanie helping us get the word out to the county commissioners. We are partnering with the other major trade associations like Accelerate Indiana Municipalities. Tomorrow we have a webinar with the Association of Indiana Counties, and then Wednesday with IASBO as well, which is the school business officials. And so we have a normal distribution list that we've compiled over the years of elected officials, business managers, newly elected officials as of this last year. And we do send out that information, but I think one of the benefits that we have of today is asking that you share the word as well. And any of the materials that we pass on through this information, that you spread the word as well. Because you never know, it's just hard to hit everybody's ears, and so, but that certainly is the goal. So yeah, as far as whether the bond bank is reaching out to so those smaller units of government, we are being very intentional about that as well. I think with that question, I encourage you to reach out, send us an email. Again, we've got very experienced staff that's ready and willing to answer those questions that you might have. And just want to thank Stephanie and her team at the Indiana Association of County Commissioners again for allowing us to give this presentation. Thank you to Ron and Angie for all the information. And of course, thank you to all of you for attending, and look forward to hearing from you all. And again, always feel free to reach out with questions. But thank you. That's all we have for today.
Thank you.